Welcome to the next part of this series. If you take a look at my face, you can see that these markets were literally one of the worst markets. So the good thing is that the EA held its ground. It was behaving very well compared to the situation. Many of my other gold traders were going down much more, and also an insane amount of EA's signals were going down hard. So it is just not an optimal market to trade gold overall. There are good periods as in these like last 2 weeks as well, of course, but generally it was not a great period. As you can see, this it still means that with 100% automated trading we made around 166% profit with 11% drawdown, which is a great ratio, so I am not complaining too much about this particular algorithm. Many algorithms were doing much worse. It is just the truth. It is not a great market to trade gold. But in this series we are talking about this particular EA, and also I am running more than 30 other versions of different strategies for gold, forex, and I am analyzing all of them with deep data analysis, and I am implementing the best performing ones to the ATG gold trader, to the Viking gold, and to basically all my gold traders. So even in this kind of market situation, they are going to be much better in the future, which is what we want to do. Now, I have to tell you, most traders are not dishonest about trading, about EAs. I just arrived to a point where I am like, if we are not honest about this, if you are not looking at all the different periods, then why am I doing this, So the only thing we can do is to analyze, to prepare for markets like this. So after a good period like this, you are going to be able to make money or be break even. And this is, in my opinion, where this EA really excelled. While most gold traders in the entire market and most gold trader EAs and manual strategies were going something like, it was, let's say, a good period, and after this they went down. This EA, it wasn't going down. It was kind of a break-even like situation. And also, I might add, we have seen this here, almost exactly this. So we have to assume that it is, of course, it is not like it is not like a huge pattern so far, but it can very well mean that it is an algorithm that in ranging markets, in kind of like crazy markets, is doing something like a break even, and then in the trending markets it is making a lot of money, and then again it is doing ranging. We are like break even in ranging markets. Let's see. It would be a great scenario, but of course, based on probability theory, we can't really tell many things. Yeah, and it is just because we are running it for 6 weeks. We are going to see after like 30 weeks or so. So we had some good trades, we had some bad trades, we had some mediocre trades, And let's see it here. Our best trade is still bigger than our worst losing trade, which is great. Yeah, the ratios are kind of the same, maybe a little less profitable trades, but kind of the same. In 6 weeks we had over 200 trades, which is something. And yeah, we are now waiting for a kind of a trending market where the market is not just going up and down in a range. We hope. What I want to show you in this video is very interesting and exciting. But before we are jumping into that, I wanted to let you know that I am actually publishing on MQL5 my index trader, that signal you can see here. I am running it for a while now on Nasdaq and US 30, and I have a ton of set files for different indexes for that EA. It is going to be an expensive EA because I was developing it for 5 years and it can basically trade everything with its parameters, which are all based on ATR, and it is going to be a very interesting one. On Gumroad I was already selling it for a while, and now that I am publishing it on MQL5, I am also preparing an update as well. So if anyone is watching who bought it on Gumroad, an update is coming, but I just wanted to add this. So what we are going to do is very exciting in my opinion, because in this video I am going to show you some other ways you can use ChatGPT, DeepSeek, Claude, any other AI basically. And that is how you can analyze your data with it, because of course we can analyze data by looking at it. It is great, you know, why not? I like data, I like numbers, I like statistics very much. But when you actually want to analyze something in kind of an automated way, there are tools for it, but I would say most of the tools are not so, for me at least, not sophisticated enough. So most of the time I am better off just with my you know, my own head, eyes, this kind of stuff. But of course for clients, for example, I am usually using Monte Carlo analysis as well, because with that you can really tell about certain types of strategies, many types of strategies, if they are robust enough, if they are complete scams, all these type of things, which is very useful to know. So without any tools, just with, in this case, ChatGPT, I'm going to show you how to do a little bit of an analysis, even if you are a beginner. Let's start. We have the trading and the history. You need to download the history. As you can see, I already downloaded it. But this is easy. Just download it, and then what you have to do is just copy it and, or you know, upload it to ChatGPT. Now let's do some robustness testing. First of all, last time when I recorded a 1-hour video from 12 minutes, it was not recording my voice, which was like, man, and there were so many great jokes in there as well. But, which is the most important, there were so many great informations about everything. So this is what it is. I have to do it again, and it maybe it's not a huge problem. I already copied, pasted here the spreadsheet with all the trades, which is now 240, around that. And what we are going to do here is very important for all of your life, for your whole life. This is the basic data analysis that you are going to need to do. Before AI, it was very different. But with AI systems, you can really automate many things. And actually, the fun fact, before AIs, I was using 5 different softwares to analyze trades for like anti-curve fitting, robustness testing, if the strategy is just successful in testing because of the randomness of its orders, and if you change the orders of the trades, it is blowing the account, or these kind of things with hundreds of simulations. And these are all very important. Now, in this first part of data analysis, what we are going to do, and please don't go away, like don't say, it is not that important, like why we are doing this, we should code. Yes, that is kind of the most exciting part of it, but for me, who is actually trading with its own robots, because now I am putting more and more of all my assets basically to my own robots, it is very important. And who is providing, EAs to customers and all these kind of things. It is very important to know the strengths and the weaknesses, especially the weaknesses of your trading robot. You should ask, why the weaknesses? I only care about winning. Very bad mindset, very, very bad mindset. And I am just honest. It is because if you are only interested in the things that are, good in your strategy, after a while, you very well can blow your entire account with this kind of attitude, and you can't really adapt to the market changes, which is now completely insane. If you are looking at the markets now, I am spending so much time these months from January. I am spending insane amount of time to catch up with the markets, because even though I have all the tools, I know many things, about data analysis, even the mathematics part, everything. It is still insanely chaotic. So if you want to have robots that are working well in these markets, you have to be like doing real data analysis. First of all, what we are going to ask is, just a general. Here is my live trade history from the last weeks. Please analyze it. And tell me the advantages and disadvantages of this strategy. It is a completely automated system, an EA in MT5. with 100% automation. It is important because some robots are semi-automated and this kind of stuff. There is no micromanaging in this at all. You can take a look at it. It's 100% robotic trading. This is just what it is. Sorry if I am misspelling some things. I am pretty tired now also. I have many things to do here in the rainforest. Wow, this darkness behind me is crazy. Sometimes coral snakes are coming here, you know, below the desk and stuff. So yes, very important. You should also tell it what kind of indicators, confirmations, this kind of stuff your automated strategy EA is using, or manual strategy. And this is because it is going to tell you some improvement possibilities, because we are going to ask it, because this is one of the most important parts. Because it has a good knowledge, you know, it gathered a good knowledge about trading, and it can give you some good pointers, some great analysis of your strategy, and it can tell you, like, man, you should add ATR based trading stop. It is the best idea for this robot. And you would say, like, wow, that is a great idea, I'm going to add this, but we already have that one. So we don't want it to only tell us things that are already in the robot, because we want to have new things that we maybe or not, you know, but implement in the EA in the future. But this is very important. So in the system we already have ATR trading, break even, ADX summation, no, not yet. MA cross below function, yeah, multiple I can't write now, sorry, multiple dynamic exits. I feel like I'm so slow now. I was in town all day in the ministries and stuff. It took a lot from me, but it is my happy place. Numbers, codes, data, it is good. So these are the main things that we have. Also CCI, it is okay. Tell me which parts are working great in the EA based on live results, and which parts possibly don't. The lives are pretty similar to the back tests. Yes. Okay, this is the first whole idea. This is a very particular, like, AI personalized analysis, because before AI it was the conclusion, like, after many calculations and stuff, but now the AI is calculating all kinds of things. And if we are going to have time, I will be doing Monte Carlo analysis. Let's see. High advantages. High win rate. 70% win rate. Filters like ADX, confirmation, CCI checks seem to be cutting out losing setups effectively. So solid majority of your trades closing profit. That is good. That is great. That is always great in these situations. Because the markets are very different now than even 1 year ago. Look, insanely different. I would have said 1 year ago or 2 years ago, go with a like around 1 to 2, 1 to 3 risk to reward ratio, and a like 30, 40, 50 win rate. But now in these markets, they are so crazy that we can't really mess with those kind of ratios, and I'm going to explain it in another video. It is the whole how the market structure shifted. Robust risk control, ATR based trading and break-even logic cap your maximum losses. Your worst loss, yeah, this is great. Healthy profit factor 2.1, that is healthy in these markets. Very solid. You are making over twice as much on winning trades than you are on losers. So the dynamic exits and all the filters are working well. That is good to know. Occasional big winners. Take profit threshold, prolong ATR runs, let some trades capture large moves. It is insanely important. So those large moves, I calculated it so much over the years to catch those large moves sometimes, because they are going to give you an edge over the market, because what we have to do, what we need is the edge. It is what we need. We don't need anything else in life. Disadvantages. Interesting take. The strategy leans on a few big winners to drive performance, while average wins are slightly smaller than losses. If the market doesn't deliver one of those outliers, drawdowns can cut into profits. That is true. That is actually something that I would say is 100% true. But if you take a look at the chart, the MQL5 chart of the EA that we've seen, the issue is that you can see that it is working the best now. None of the high risk reward types of EAs are working now, and I know that. And this is why this EA is working at the moment very well, because now in this market structure what we need is to have a break even many times, and then have some insanely big trades, some great trades when the market is going in our favor, and let it run. All the other times cut the losses, cut the profits, because it is just so much of like a fluctuating market. It is painful to watch. But with these kind of so it is a disadvantage in normal markets, I would say, but in these markets it is an advantage. So yeah, it is what it is. Equity curve choppiness. Your live equity curve shows longish flat, as I said. Why? Or drifting periods and sharp dips. That's true. Suggesting that some dynamic exits may be kicking you out too early, only to see price reverse thereafter. Again, in these markets, many times, like I am, and why I know this, not just from my head. I know some things from there as well, but I know this because I am running over 30 live accounts. Many of the accounts are running high risk reward stuff because I am a high risk reward trader. So when I am talking about these things and how they are better in these markets, I'm not kidding. I wouldn't choose these if they were like, they are just better. And the high risk reward ones that are that are not cutting the profits. Unfortunately, they are not working now. So this is, I would say, this is going to change. I think I am always working on new set files, new updates, but in these markets I wouldn't change this. So chaotic, everything is so chaotic. If you take a look at the economy, the world economy, the gold price, the indices, so just take into account all those things. But of course, we can work with this. I think this is something that I'm going to test. So I'm going to test if we can a little bit like loosen the grip on the dynamic exits. Yes, it is going to be interesting. Trade duration. 4 hours. Medium term holds tie-up capital. If margin pressure builds or swaps are unfavorable, carrying trades that long could incur extra costs. Like 4 hours on average is not long. What is ChatGPT thinking? It's not long at all. Many of my ears are holding trades for even 2 weeks, or, you know, days. 4 hours? But yeah, compared to scalpers, it is long. Maybe I am going to publish some sets with partial close that are that have like 10 minutes average. Maybe we should try that out. I think I'm going to put up a live account with those kind of sets just to see. If you are interested in me putting out high risk reward ratio sets to live account with DCA to signals on MKL5 or my FX book, let me know in the comments, because if you are interested, I can do that and we can compare them. Maybe it is interesting, it's video and stuff. Recommendations. Revisit exit triggers. Consider tweaking ATR trail multipliers or dynamic exit steers so you net for winners. Run post break even. Again, we can try that. Okay, not as hard as I would do that in normal markets, like not 1 to 3 risk reward ratio, but it would be actually nice, as I maybe said, to bring it like to a 1-to-1 risk reward ratio with a 70% drawdown, 70% win rate. It would be something that is very stable. So okay, noted. Test relaxing one of the confirmation filters in low volatility regimes to pick up additional micro trends. Okay, I will do that. Maybe it could end up be profitable. Okay. Holding time constraints. No, this is just bullshit. Let's see overall. Live results mirror your backtest in terms of win rate, profit factor, ATR stops, break even. Yeah. The main area to sharpen is smoothing the equity line by fine-tuning exits, so you can capture more of the mid-size trends. You know what? This is why I like to do these analysis, because we have the ego and everything, like we know that everything, and it's even if we know it's not true, we are like, no, I'm a pro in this area. But sometimes you miss things that are actually just in front of your eyes, but you are doing so many other things that you don't see. This is interesting. So mid-sized trends, and it is true that in this EA now there is like some set files, but generally there is no. It is not equipped with the ability to generally pick up mid-sized trends. Now, mid-sized trends are also dangerous, so this is the reason, I think, why I didn't include it so far. But if you can harvest them and don't lose too much, then you would have considerably more profit and maybe even lower drawdown. But we really have to figure out how to harvest the mid-size trends, because it seems like it's easy, but it is actually not. And I'm going to, so we are not rushing anywhere, right? No. So I'm not going to tell you everything about this, but I have 100 ideas for this video series, and I am really, finally, I'm enjoying the series for my YouTube channel. It was in years that I enjoyed the series, so, you know, don't rush. Okay, next. I don't know, this mini high version is, I don't like that the moment too much, so do a Monte Carlo analysis with reordering, skipping trades with at least let's do it. Let's do it. So what we are doing is one of the most important parts is reordering. And you would say, what is that? Why would you do that? And it is actually very important. I am also a professional in testing EAs for companies, and EAs like strategies and automation and everything. And Monte Carlo analysis is a tool that is the best for this kind of thing, because reordering many times is showing companies, for example, who just did, for example, a backtesting. The backtesting, it has great results, some auto-sample testing, it's alright. But when you are doing a reordering many times with those like perfect AI, those EAs, Monte Carlo analysis shows that they are actually fraudulent, because when you run it, you see that the equity curves are many times not like this, like almost all of them are in the positive, except a few, but many of them are completely down, like insanely. And that means that you have a good chance that your entire, even the backtest, was based on the order of the trades, and if the order is a little bit different, then you lose all your money. I think you already see what I mean, why it is not great. Let's see. Interpretation. Robustness, expectancy. So if you have an EA, if you have a strategy, if you have just, you know, the trades, live trades or backtests, ask ChatGPT to run this or any other AI, and you won't regret it. So robustness, expectancy. Even with randomness in order and skip trades, most simulations stay profitable, as I said, showing strong core expectancy. Insanely important. If you don't have that, you have a high chance that in any market, the EA is going to just blow your account, honestly. Even if you are trading with a low lot size, which is not great. Let's see, resilience check passed. The strategy isn't overly dependent on specific sequence of trades. Good news for long-term robustness. This is one thing that is in Monte Carlo. It is just so good. It is easy, it is quick to do, and it is something that you should absolutely do. And despite this, most traders don't even like heard about this. It is much more important than any of the backtestings. And I'm not talking about like out of sample and walk forward testing, but it is very important. Yeah, so it passed the like robustness testing. It's not overly dependent specific sequence of trades. A few simulations dip below 300, suggesting that unlucky streaks, skipped big wins, clustered losses, can sharply reduce equity. This could happen in a flat or mean reverting conditions. Now it's still not like I am going to show you. It is something that I think in the future I'm going to care about more and more as we are going further. But as you can see, most of the charts, so in a very high probability, it is not going to happen. It has a small probability that it's going down like by 30% or so, drawdown. But it is especially impressive, in my personal opinion, that it is this way despite the fact that most of the time intentionally it is doing like break-evens and then big wins, because this is what is working in the current market. So, and Monte Carlo analysis is not seeing what is needed for the current markets. It is seeing, it is very good that it is seeing everything objectively, so you are not like by emotions. Let's see. Your strategy shows high robustness with potential for great upside and manageable downside. You might further improve by reducing reliance on outlier trades. Okay, as I said, with those mid-sized trends, we are going to see that. Testing with varying skip percentages for stress testing, we are going to do that also. Adding volatility regime filters to minimize trading during flat and noisy markets. Much less trades that way on gold most of these times, but we can try it out. If you are interested in more of this, now I am going to end this video, because I just wanted to see how it, you know, how you like it. Maybe you don't even like this kind of video. It's okay. I am going to still do it because it is a must for any serious trader. I am not doing this for the, you know, for the enjoyment of the watchers. I'm doing this because I believe that it is important. But still, if you like this, let me know, because then I am going to do many more parts of this series with many more stress testing and there are methods, there are many more methods. As I said, I used several softwares before AI. I am still using those softwares, not all of them, but a few. So let me know, like the video, subscribe, and I'm going to know that I should make more videos like this. Ciao.